While you may not like some of the tax provisions and you may be wondering why they exist, the best thing is to understand what are the ways in which you can minimize your taxes as a couple and work towards putting your finances in place so that your total tax outflow as a couple gets reduced. In this session, we've learned that you should avoid transferring money to the accounts of your spouse and investing in your spouse's name, because that results in the provisions of clubbing of income and will actually not result in any tax benefit either for you or your spouse. Similarly, a wife will not be able to take gifts from her in-laws as a method of tax planning or as a way of having some investment income diverted to her name, because that particular event also attracts clubbing of income and will not help reduce your tax liability. It instead goes, both these clubbing provisions make it a little more complicated for you to keep a track of how much of income is yours, how much of it was it received as a gift from your spouse or from your in-laws, so that you're able to report the correct income as your income and what income needs to get clubbed in somebody else's return. So these actually go a step ahead and complicate your returns and require you to keep a track of these earnings separately. We also learned who qualifies as a relative and the fact that any gift that you receive from a relative is completely tax-free. So is any receipt that you get at the event of your marriage or as a result of inheritance on the death of a person. It is extremely important that you understand at your income individually, that is both of you as a couple look at your individual income, your individual deductions, your individual tax rates, and also have a look at your income together to try and figure out a way in which you can minimize your tax outflow as a couple.